Good morning, folks, and Happy New Year to everybody. It's Friday, the 3rd of January. We've had a really good festive season, and looking forward to get back into these markets. I'm just going to have a look at the German Dax. This is a weekly chart. This is what the chart obviously we've been watching for quite some time, and you can see that we've completed this pattern up here, the 5-point expanding reverse wave, and you can see this is a weekly chart. And for the last 8 weeks, it's just gone into this range, as you can see now. If we just go back a little bit, there is a bigger ABCD that comes in, and that would test the highs that were made at the beginning of 2018 over here. If we were to get up one more time. But if we come down and look on a daily, it's looking a bit of a more confused picture. If we look at this daily chart, you can see we closed it. This is the new beautiful little ABCD, in fact, nice little Gartley pattern there, which completed just before the new year on the 30th. If I can draw that in, if we take the low that we made here in the beginning of December, and then there's your little Gartley pattern, coming right at your 61% retracement, and then yesterday we gapped up and just had a uptrending day all day long. This black line you can see, this is the resistance that we had. We tested this resistance several times, then it backed off completely. Then we tried again, managed to break through it, but couldn't close above it. And then it's been a level, it's been like a pivot point, been like a level of support and resistance, and we just can't seem to break through. Yesterday looked a really positive day. I think, oh, now that looked like we're going to complete another A, B, C, D. That would take us up close to that 13,600 that we were looking at. But you can see now what we've done this morning, we've just given it all back up again. So there's this sort of pattern, this expanding reverse wave. You can see this is signs of uncertainty. There's no other way to put it. We're not trending. We've had a good move, had a good run, as you can see. This ABCD completed from the low we made at the sort of mid-August. That's expanded. The CD legs expanded to 1.27, and now we've just got this sideways mess, really, that you can see. And this is what we call a Twin Towers reversal pattern or train track reversal. Bullish up day all day long. Now it's looked like we're going to have a bearish down day. So that's given everything up that we gained yesterday. So from a bullish perspective, that doesn't look that good to me. While we're on, we can have a look at a few other markets. We know we've seen these patterns completing everywhere on the long-term weekly. If we have a look at the Australian 200, last time I did the video, somebody pointed out I didn't do the Aussie 200, so here it is. Let's have a look at what we're seeing on that one. And again, if we do, you can see we've completed a butterfly from the high we made in August, or late July, early August. That's completed double top. If pan it really out long term, this chart, you can see that the high we made in 2000, all we've done is make a double top coming into this high. So we had that big sell-off in 2007, that was sort of the credit crunch. And then you can see we've completed two ABCDs. The first one's expanded to 1.618 times its AB leg. That's the one in black. And then we've got a perfect A, B, C, D completing right where, just shy of 7,000. You can see we've backed off a little bit. If you look at this on the daily, again, we've got this uncertainty, what we've seen in other markets. Have a quick look at this on the daily chart. And there's the butterfly that we can see. Gartley, sorry. Actually, no, it's a butterfly because your D leg's gone above point X. So that's a butterfly. Backed off, rallied back, tested the highs. Now we're backing off again. So this might be just consolidating before it decides to power on higher, or we could be near some sort of major top. The long-term patterns are telling us that we shouldn't be near some sort of decent sized correction on all these markets. So let's just have a come down, have a look at the French market. We don't trade this one very often, but people have asked about it. Again, long-term weekly, we're seeing the same thing. 5-point expanding reverse wave, 3 drives to a top completing. It's a sort of a doji week, a bit of an uncertain week. Don't know what that looks like on the daily. I've not looked at the daily chart of the CAC recently. Let's have a look at it. Oh, there we had the 3 drives. All it's done is expand. The CD leg just expanded. Done a 1.414. So there might be a little bit more upside in that. This ABCD that you can see here, that's just expanded to, looks like 1.27. If we just have a look at 1.27 of that, see where that comes in. Right where we are now. So that ABCD has just expanded to 1.27. Now it's backed off. Early days to say whether this is the top, but well worth keeping an eye on it. If we go forward to some of the US markets, leader of the pack, the Nasdaq. Let's have a look at that. Again, we've got a similar scenario on the daily. We had a bullish up day and then just giving it all back already. This is in the futures hour. The market's not opened yet. So you can see these patterns failed. Or did they fail? Well, they failed on the daily, obviously. When you see this, that's a failed pattern. You know, butterfly, you know, it doesn't extend that far. You would, if you were going to be short this market, you know, on this doji bar, you'd probably wait for it to take the low of the doji. If you're going to sell the doji, you just have your stop above it. So you'd be out on that candle anyway. If you had gone short on these completed patterns, you will be out. If you wanted to wait till this one closed, then that you'd definitely be out on that one. We won't risk any more than that. That's a failed pattern on the daily. But if you look at it on the weekly, all it's done is extend. Here's the weekly chart, and as you can see, these patterns are still valid. We've just extended these CD legs by a little bit. So on the weekly, patterns are still valid, but the daily ones have failed on the Nasdaq. Let's go back and have a look at a few more. If you're not bored stiff, let's have a look at the Nikkei. Well, this one didn't make new all-time highs, but it got up and it sort of made this like sort of triple top. And you can see today that's given up the ghost already, hasn't it? It's a beautiful Gartley pattern, as you can see. There's a nice little Gartley there, and this YX ABCD. Then it completed the ABCD to the upside, extended the CD leg a little bit, and you can see now this is already starting to back off. So be interesting to see where this goes, where it closes today, and obviously where we open next week. We could be in for some sort of a correction. What you'd look for at least to what it did the last time if it starts to correct. So you'd look at this swing, the high to the low, and just project that from the high here. If I can grab it, there we go. You'd be looking to at least that, and then you'd see what that comes in at as a retracement off the low we made here. So you'd look at that. You're probably at 50% maybe. Yep, well, you're even 61.8, look. So that's what you'd be looking for on this first move. Then ideally you'd want to see a little ABCD to a lower high, and then that should start lower. Look at the Hang Seng while we're on. Hang Seng were a lot weaker than the other markets. And as you can see, all we can manage to do with this, well, little Gartley 3 drives to a top, it's gone up and extended to the 786, hasn't it? On that. I'll just drag that up there. That's all it's done is extend that up. So that's because a daily chart of the Nasdaq, the Hang Seng. See what we're seeing, and again, yeah, it's just completed a large ABCD from. Look at take the low that we made down here to the high. That's completed a beautiful ABCD pattern into there. That'll not be far off. Absolutely spot on. Look at that. You can't make this up, folks. You can't make this up. That's perfect ABCD from the low we made in August. As you can see, we've come down and this low in August. Had an ABCD pattern there, if you can see it. ABCD there. And this one, the larger one, So that's looking like it wants to correct. Again, you'd be looking at the same move as we did last time. These moves are very similar. This one probably slightly smaller. That move down, so you'd be looking at probably a 618, I would guess, from there. Grab that and project it from the high. Over there. That looks like at least a 618 or more, doesn't it? If you take it from the low it made back here, you're looking at beyond the 618 off that. It's a minimum correction there. So you could probably take some profit at 382 if you were to short that. Let's have a look. What else have we missed? S&Ps. A quick look at S&Ps. Again, perfectly valid patterns. Your butterfly, 3 drives, and the expanding reverse wave. And then what we've got on the daily, as you can see on your daily, again, that's failed. That's a failed pattern. Absolutely. If you'd gone short on this candle, you'd be out on that one. Don't stand in the way when they don't work. That's one of the secrets of the game. I like to see these wide ranging. You see, we had a sell off here, but it didn't amount to much. But this is quite a significant candle. And we'll look that we've closed. That would close on the 30th of or 31st of December, and we had this gap up on beautiful move higher yesterday, and I've just given everything up today and closed the gap. Any break below here suggests to me that we're going to see some sort of correction. Any move greater than this little swing here, that sets up a much bigger move lower, so keep your eye on that. Like I say, these weekly patterns, folks, I've never seen so many reversal patterns in my life on all these equities. Every single equity market in the world is displaying these patterns. These are major reversal patterns. These aren't just patterns, you know, these are all major. I mean, the multiple patterns coming together. When you just a new all-time high, all you can do is look at expansions. But you can take these, if you look at some of these on the long term, the extra long term, I mean, the FTSE, if we're going to have a look at the FTSE, we've not seen that today, have we? Have a look at that one quickly while we're doing it. Here we go, FTSE. I think we did a long term on this one. Just start on the daily chart. You can see that completed this ABC. There's a Gartley there on the daily. And that's coming backed off 3 days. Now he's had a bit of a strong rally, but he's giving it all up again. We're trading down here. So we've gapped down this morning, as you can see. I'll just refresh that, make sure it's actually has gapped down. Yeah, it's gapped down from it closed up here, we've gapped down from the close last night. The close on the FTSE was 76.29. And it's gapped down, it opened this morning at 75.73. That's a big gap down from the close yesterday. So, and if you look at the long-term weekly on the FTSE, you'll see that this has been it's sort of gone into range for the last year. It's gone nowhere basically, since obviously there's a lot going off with Brexit, what have you. That came in 2016. The first Brexit vote was middle of 2016. We did have a decent rally going forward. In the last sort of 2 years, it's gone nowhere basically. It's the top end of nowhere. That's the type of the range. But if you take it back further, you can see this long-term chart. This is a butterfly completing from the high we made in 2000. Came down. Beautiful ABCD. CD legs expanded to 1.27. Absolutely spot on. And then we've got the other ABCDs from the low we made in 2011, as you can see here. A beautiful A, B, C, D. You can see in black. That is complete as well. So this sets up going forward. If this thing starts lower, you'd look for a minimum of an A, B, C, D from the high. So you'd look for your A, B, C, D. That's a minimum. So to fade that back, that's going to take you down to there, 6,400 area. If you measure that on your retracement from your low to your high, that comes in right at your 61% retracement. So that's a move of that 1,100 points from where we are now. If this thing starts to head lower, so there don't seem to be many buyers about when it gets up to this area, does there? just seems to want to sell off. So we'll have to wait and see. Obviously, it's early days, but if this thing starts lower, get ready to get short, folks, because there could be some nice moves to the downside on these longer term on these equity markets. So keep a close eye on them. Happy New Year to you all, and enjoy your weekend coming up. Take care, and good luck with your trading, folks.